All right, hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. I hope you're doing well out there. It was a pretty eventful week out there in the market, a lot more than I would have expected for this time of year. We had some relatively impactful economic data released this week. It was delayed data, November, but still market moving. We had some interesting catalysts kind of roll through that stop the bleeding in the AI trade in general that we're going to talk about. And we've got lots of individual stock ideas that are starting to work again or reclaim some strength, and some new names that are breaking out. So there's a good amount of changing of the guard this week. So it should be a good show. Let's get into it here. Our sponsor is Investors Business Daily. They've been sponsoring the show for a while now. We've got links in the description of this episode once you're done watching to claim some discounts on their Market Surge platform and their IBD digital subscription. Check it out once you're done watching this week's video. So our story starts here. This was the Consumer Price Index report for November that hit the tape on Wednesday, and it was disputed in terms of its relevance and some of the effects of government shutdown. But all that aside, the takeaway here is that inflation is cooling, came in lower than expected, and really the concern for inflation in this economy and market now is seemingly a thing of the past, or it's just becoming less of a concern in the market. Oil prices are low, gas at the pump is low, and it seems easing here for this factor of the market. And so couple that with the fact that unemployment is sort of stressed or kind of heading the other direction. And what this does effectively is it helps support the Fed in their potential cutting path, right? And that's what the market was really sort of pricing in a little more aggressively this week. And this helped put a little bit of a midweek low in the market. And we're going to spend some time looking at price. We're going to spend a lot of time looking at price action in just a little bit. Our second story was Micron. So Micron here really, they reported earnings after the bell on Wednesday, and this is kind of double whammy here of CPI and then Micron, but they had a great kind of blowout quarter by most metrics, and they really just came out and reaffirmed the CapEx expenditures and the demand that's coming through. And again, that sort of gave confidence to this other worry here, which is these AI stocks that are, increasingly being scrutinized about where the money's coming from on all this build out, the aggressive spends and the aggressive debt that's being raised, and or the cash that's being spent by micro hyperscalers at a very quick rate. And so this helped ease a lot of those concerns. Micron, as we take a quick detour here into putting our trader education hats on for a second. Micron is a Quant Rockets. It's our momentum model. It's a current holding. We purchased it back on the 10th of December as it started to move back up towards highs. And we immediately sort of sat through a pullback here, almost got stopped out, and thankfully earnings and the turnaround there sort of bailed us out. Now, this previously was a trade, a hold for us on a more durable fashion back in September. So again, this is Micron, which we had a 36% gain in from September to November. And I was going to spend some time looking at this later, but I'm just putting it here as a trader, right? The part of what I see the goal of the main purpose of trading is to manage risk, right? Is to live to fight another day at all costs. And so Micron, as it starts to lose momentum, break down from trend, that's what gets us to exit at points like this. And you never know as a trader if you're going to be the low, you're selling the low, and that stock is going to pop and just turn around after you sell. That's basically what happened to us. Or the stock might continue to cascade and the trend could truly reverse, and then you thank yourself that, yes, you took the stop loss and you did not ride a stock all the way back down to your entry point. Worst case is if you got out, then you just have rules to get back in, right? And that's exactly what this workflow does, what our momentum model does. And there were plenty of stocks that we got stopped out of here think Cypher, Iron, Nebius, AI, insert, momentum name, Oklo, or any of those guys. We took a lot of exits at this point, and many of those other names fell another, 30 plus 40%, right? And so that's why we do it. That's an aside. We're supposed to be talking about news, but I figured I would inject that there. End of the week, we got some reports here that OpenAI was going to be raising a new round, $750 to $800 billion valuation on the company. They were going to raise upwards of $50 to $100 billion of cash. And none of this has been confirmed yet, but rumor has it that they are in talks. And all of this collectively, I think between Micron, between OpenAI, this gave and this kind of plugged a little bit of a leak, a concern, a worry for the market, where a lot of those AI thematic plays, I'm just using that as a broad umbrella, the whole stack really that's been selling off, Oracle at the middle of it, could breathe a sigh of relief, right? That, funding was coming, funding is coming, right? And maybe this is enough where the worst case scenario is at least not something we have to deal with right now. CoreWeave is a good example of this. We'll look at charts later, but CoreWeave was up 22% on Friday. I mean, that was a huge move. Big volume coming in. There were some other stories specific to CoreWeave, but the point is that the bleeding here seems like stopped on Friday. It seems like this is kind of putting in some type of low for the the concerning part of this AI trade, at least for now, right? Not permanently, but for now. And I think the market can breathe a sigh of relief. You got Oracle, which didn't pop as much, but kind of reclaiming back over its November lows, 7-8% move on Friday, uptick in volume. So again, I think, investors can at least breathe a little bit of a sigh of relief going into the end of the year that maybe we're not pricing in the worst case scenario. Now let's look at some numbers here. So the Qs actually led this week. It was a rotation back into large cap stocks and technology. Qs were at the top of the list. Russell 2000 was down almost 1%. There was some decent selling to start the week. It was really a turnaround story here. On Wednesday, this was post Wednesday was CPI and then Micron, and that really was catalyzing to kind of move this market back up to the upside here. If we look at the volatility index, the VIX, it's back down to lows now around 15. So that's notable as fear starts to come back out of the market. And the dollar is changing a little bit of, again, really just a bounce. I don't want to make a big deal out of this. It's been in a new kind of trend lower here. It's bouncing, but also interest rates. These two things go hand in hand. We started to roll over a bit this week. And so this is, again, some rotation that's happening, some changing under the hood of macro currents and even just individual sectors that are leading. Discretionary tech and healthcare, those are your top three performers. Energy, still stuck in the mud. I've been flat out wrong in energy here. I've been looking for kind of a rotation, a breakout, a move up in XLE, and it just has not happened. So I've definitely been wrong on that. Real estate staples, your second and third worst performers. Breadth is still decent. We talked about breadth being good last week, and so that's still the case, even though it was more, a story of large caps this week where breadth actually got worse this week, believe it or not. It's still, decent on the margins. It's really energy and utilities that are the hardest hit, kind of in the worst spot right now. 52-week highs and lows confirms this, right? So again, we had a spike over 200 highs made. This was last week, and this week we sort of dried up. We didn't go anywhere on the number of lows, so that's good. But again, it just shows you that some of those mega caps are really picking up the steam here. Percentage of stocks above 20 SMA still hanging at pretty decent levels. We had a little bit of a spike in the put to call ratio, but that kind of came back down. So that's it in terms of prepared slides. We got lots of trade ideas and some individual charts, so stick around. All right, so we've got the S&P 500 cash settled market here. This is Warden TC2000 charting platform. And this is the roadmap. This is the annotations we had last week, right? So we basically talked about the S&P 500 broadly in this sideways channel here. Broadly speaking, it couldn't quite break out to new highs last week. It slogged itself sideways for like 2 weeks. And we were waiting to see if the sellers could break this market down, right? I was pretty critical on the market last week, particularly on the NASDAQ, basically looking for prices to head lower. And as I leave this week, I'm a lot less pessimistic on the market, and mostly for A, the price action first and always most importantly, but B, the news that we talked about at the top, right? Where two of the big concerns for the market right now, what the Fed is going to do, and the risks in the AI trade, which had been kind of strong arming the market higher, both of those, leaks sort of got plugged, right? Even if it's temporary, it got plugged. And so as we now look ahead into a holiday week, the end of the year, one thing I certainly have learned over the years is you don't fight the prevailing trend at this time of year, because things tend to just float in that direction. And with the turnaround that we saw this week, the negating the sell-off and the breakdown of Wednesday's bar, I do want to give some respect to the price action here and the fact that we kind of bounced right back up, kind of coming right back into this range. It seems like the S&P 500 is going to want to take another run at these highs here, and I wouldn't be surprised if we got some marginal new highs here into the end of the year. Could be wrong, right? We could still very much be in chop fest, right? I could eat my words if there's some negative headlines over the weekend that really put a sour mood on things and the market starts rolling over again. It's entirely well possible. It's still a sideways, broader pattern here, but in the near term, I do think that the bulls sort of won the fight this week in terms of saving the market from a breakdown that was starting on Wednesday. The NASDAQ 100, again, I was very critical here last week, but look at we saw some reasonable selling this week, right, into Wednesday, and some ugly price action, and the indexes don't tell the whole story. Individual stocks were getting beat up a lot more. But, given the fact that Thursday we, kind of bounced right back up, we didn't give anything back, printed this inside day, and then Friday we followed through up and we took out, a 3-day high here. It just feels like this market now, the worst might be behind it. This low might be it and might be some type of higher low. And it looks like the Qs might want to just get back up to this range. Again, could be wrong on this chop here in the short term. I still think it's a trickier market, but I just don't want to fight it too much here. I had some short hedges on in the Qs. Those are all off now. And basically, I'm just left with various degrees of long exposure at this point. So that's kind of the read there. Again, things are still structurally a little bit messier, but there's clearly been a little bit of a pivot here in some of the large cap trades. Russell 2000, notably as well, kind of fell below this area here, right? That was important, this breakout zone around 250. So, and it's kind of just basing right here. So I think this is an interesting one to pay attention to next week. Can small caps still persist if large caps are going to start to work again? I mean, as money start to rotate back into some of these other, the Oracles, the Mag 7 and things like that, we shall see. But for now, I mean, the damage is quite minimal, but it certainly lost a little bit of momentum, I'd say, this week, falling back below that, 250-ish level. Right. All right. So that's kind of the read there on the majors. I mean, we talked about the VIX just briefly, but you can see it just sunk all the way back down below 15, basically closing in on year-to-date lows. So a lot of fear coming out of the market. Metals continue to work. I keep, kind of posting gold bullish charts here. I mean, it's been a very impressive year for the metals, and I can say metals now because certainly silver is just, look at the year it's having now, 131%. That was on no one's bingo card, I don't think, coming into this year. And so this is just rip-roaring and trading at new highs. But same thing with gold. Hasn't quite, cleared the high here, close back in October, but this consolidation still looks pretty decent to me. Look at gold miners. So GDX has already broken out, taken out their October highs. And so this is continuing to kind of technically stair-step themselves higher. IBB, I think, was notable on Friday as well. You get a nice consolidation and a pullback here finally. We were talking about the strength in biotech stocks and kind of this runaway sort of uptrend that it was been in. Well, you did get a 5% correction. Again, it's not much in the grand scheme of things, but you had a 5% correction and basically 2.5 weeks of sideways to lower as well. So you got kind of a pullback, mostly through time and a little bit through price. But the turnaround here on Friday looks pretty good. That might be it for that current pullback. And XLE, like we mentioned here, just cannot get going. And again, oil continues to head lower as well. Natural gas fell off a cliff. So you're really just not getting too much help here on the XLE side of things. So that, I think, is it on the majors. I want to talk about some individual stocks. We can look quickly at some of the stocks that we're trading, and you can see here, let's see, we have our Galahad, our long-term trading system, right? So this is our kind of all-weather portfolio, as we like to call it, and it's still in the same positions. Again, this is kind of a slower boat that doesn't change too often in terms of its big core holdings. And so this is pretty much staying the course, having a great year. So I'm happy with that. If we go to Quant Rockets here, we've made some nice UI adjustments so you can start to really kind of dial in on new buy signals. You can see this was a new buy signal coming into today, so a little bit of a freebie there. But if we look at my favorites from this week, and I own most of these, just full disclosure. Planet Labs, I think I talked about a couple of weeks ago, but this is back at it. Space, generally speaking, this week is really kind of coming back, and our model owns most of those kind of speculative space stocks right now. PL closing in at highs. I do own that, and that's been a very fast sort of winner here. FSM, so again, speaking of gold miners, this is one, again, I own it, that is in a nice trend, nice pattern, not extended, but this is in the gold mining space. QBTS, so this is a familiar name, I'm sure, for most people. This was a trade that, again, we were in back in this area. We, stuck to our risk management principles. We exited somewhere in this general zone, and now we are back into it, and we are looking to see if this higher low can stick, and if this can start to recoup and make a run for it. So QBTS, I think, is interesting. It's not too extended. And if you want something that's holding up a little bit better on the semiconductor side of spaces, you could take a look at RMBS. So again, this is something that I believe I own this one as well. I sort of forget I think I do. But our model likes it. And, again, if you look at some relative strength, semiconductors, have been, kind of selling off semi-aggressively there, and NVIDIA certainly. And if you look at RMBS here, it did get hit pretty good, but then it, stabilized in this zone. It's been moving sideways, so I think it's got some interesting potential there as well. So those are a couple of names that we like on our momentum model. And then a few names that I wanted to talk about was Rivian, as this is notably starting to break some bigger levels. You got to go to a weekly chart here and take a look at this very rounded sort of bottoming pattern as this starts to lift up, volume starting to come in, breaking above some multi-year highs here. That's impressive. You're definitely chasing it at this point, but depending on your time horizon, this is starting to really break some bigger levels. And along the same sort of look, quite frankly, is Zoom. So Zoom has been dead money sideways here for years, and it is now starting to round itself back up. I've been looking at, this general area here above $88 or so for it to start to move up, and it seems like it's trying to. So again, these would be the bigger, longer time horizon sort of trades to play themselves out. But you have some interesting looks in both of those names. And I think that's pretty much it. We talked about Oracle and how this stock is, certainly one to pay attention to because it just embodies the mood of a lot of the AI trade and the market on the fringes in terms of the most important catalyst and secular trend right now. And then, of course, you could look at CoreWeave. CoreWeave here also, like we talked about, up 20%. And I think if these two hold on their lows, then it's going to probably be tough to sell this market off because you just have a lot of that anxiety kind of capped on the downside for right now. So that's it. That's what I've got for this week. Hopefully, everybody's finishing out the year okay and preserving those gains, or tax loss harvesting, or whatever you're trying to do at this time of year. We're quickly winding down 25. Next week's a holiday shortened week, so certainly be aware of that. And once again, thank you so much for tuning in every weekend. We've got links in the description of the show: Galahad trading system, our Quant Rockets momentum model, our IBD links. And if you want to chat with me on some of the trading that you're doing, I can offer those calls as well. So that's it. Thanks as always. Have yourself a great weekend. See you next week.